The global financial system is trembling as one of the world's top 30 so-called too big to fail banks required an emergency takeover to stay solvent. Credit Suisse has $1.6 trillion of assets under management in 50 countries and was bought out for a fraction of its value by the Swiss UBS bank, one backed by the country's central bank.
The bankruptcy of Credit Suisse would have had a huge collateral damage on the Swiss financial market, also risk of contagion for UBS and other banks, and also internationally.
The takeover was negotiated with Swiss, US, and UK regulators who fear global financial instability will spread. UBS says their new property will engage only in low-risk activities.
Let me be very specific on this. UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture. It is intended that the combined investment banking businesses will over time account for no more than 25% of the group's risk-weighted assets.
But the banking crisis comes after 3 medium to large-size U.S. banks collapsed in the space of less than 2 weeks, creating fears that global banking is at risk. Asian markets, the first in the world to open this morning, opened on a sharp drop.
The situation is not as bad as 2008 in the financial tsunami, but the people are thinking of this may be a mini bank run. So this morning the market opened lower and then it went down substantially lower.
The problem is twofold. Governments worldwide have hiked interest rates, which has cratered the value of banks' government bonds, usually considered sound investments, making the banks insolvent on their balance sheets. And at Credit Suisse, much of the bank's value was in the riskier investment banking sector, and thus negatively impacted by interest rates. All told, Credit Suisse lost 70% of its value in less than a year and took $54 billion in government loans, even as account holders pulled $118 billion out in the same period, causing another bank run. While regulators say there is nothing to fear and that the purchase solved Credit Suisse's problem without the need for another bailout, the collapse of one bank after another speaks for itself.